All right, we can go ahead and call the meeting to order and proceed with roll call. Leah Hayes, I'm the police trustee, acting as chairperson today.
I'm Walt Berry, I'm trustee.
Harvey Lewis, trustee.
Steve Arbell, trustee.
All right, is there a motion to adopt the agenda?
So,
All
I'll
right.
second it.
It's seconded. All in favor?
Aye.
All right, motion carries. And approval of the minutes? Is there a
Approved.
motion to approval?
Oh, yes.
No.
All right, approved and seconded. All in favor?
Aye.
All right.
Hey Bob, sorry, I think we had you on mute. Can you hear us now?
Yeah, I do.
Okay, we can hear you too now.
Sorry about that.
That's right. People would say it might make the meeting go faster.
I didn't say that.
All right, so the first item on the agenda is a presentation by Nuveen.
I don't think we had.
They're not
They are not,
logged on yet, so
Logged
maybe
on
we want
yet.
to move on.
I believe they're planning to join at 10 o'clock.
oh, that's right, I'm sorry. Yeah, they had requested a later presentation because of some travel issues. Bob, did you have anything that you wanted to?
Yeah, the only things I wanted to do were actually three things. I wanted to know, for our collective benefit, has the Division of Retirement answered your question about the timing of the payment of the state money?
They have not. I've asked them twice now and I haven't gotten a response, so I may call Keith Brinkman.
As soon as I sign off, I will call and follow up.
Okay. So just to, I don't know if the board's aware, to summarize, we had submitted the annual report a couple months ago. It went through the review process. They had a couple questions, which I answered, and a couple corrections to make. And then the report itself, they appear to have, accepted the report, but there are attachments that are also required to be sent as backup for the report, including audited financials. And the city is still working on their fiscal year 21 audited financials, so we don't have that available yet, and we're not sure that we'll have it by September 30. What we will have by September 30 is the Purvis Gray Auditor's Report on the pension plan. So that's sort of a second question I have for them, Bob, is whether that is sufficient to satisfy their audited financials.
I think it will be, but I'll make sure.
And so, in any event, the state used to have a rule that if the report was approved, but some other element of the requirement, like the VAL, had not been accepted yet or something like that, the city could count that year's premium tax money as a receivable even if it had not been received by September 30. And I'm trying to clarify with them whether the report is actually approved and that sort of rule would apply in this case. And I've asked them a couple times and have not heard back. But
I will bother them until they give us an answer that says yes.
thank you.
The only other things I had, because I know they're starting to issue checks, that's what I had asked. I looked at the revisions to the investment policy statement. I sent Cole, William, and Gregory my comments on it last Thursday. And I was fine with the changes that you've made. You can certainly delegate to plan investment staff after consultation with the consultant on rebalancing. And there's no fixed schedule now for having managers come. The one time I think it's mandatory that they show us if there's a change in ownership, management, or if the chief investment person for that manager departs one way or another, fee first or otherwise. And because there has been a great deal of merger activity among the asset managers, and when there is a change in ownership, the SEC requires us to consent, but I don't like to consent until I know what exactly we're consenting to. So I think that has to be a mandatory appearance. Otherwise, I thought the changes were fine. I certainly think it's appropriate for Cole to comment on the allocation percentages that are at the end of the report. That's definitely not lawyer business. That's people who know how to count business. And so those will be fine. Other than those minor editorials, my recommendation to the board would be, if you're satisfied with the allocations, that a motion to adopt the revised investment policy statement would be in order. And the last thing I had was a question that Eugene had raised about whether he can vote remotely. The answer is yes, here's why. There is no requirement in the Sunshine Law for a physical quorum to be present. There's no prohibition in the Sunshine Law for a municipal police and fire board, public safety board, to meet physically. And while the city has the authority to regulate procedures for the general employee plan, state law preempts that aspect of management of the retirement plan. So unless you all adopt a rule that says, an operating procedure that says you got to be there, there's no prohibition against remote voting. There have been Attorney General's opinions over the years that said it would be nice if there was a physical quorum present, but even the Attorney General's Sunshine Manual admits that there's no statutory requirement. So there is no statutory or other prohibition that prevents the chair from voting. The only requirement, if you're going to use any form of virtual meeting like we are now, is that the public has to have a free portal to be able to listen and to comment. In other words, we have to be able to hear them during comments from the public, and they have to be able to hear us. It doesn't have to be that you don't have to go buy them a computer. The Zoom portal also has a toll-free telephone. So the city commissioners aren't required to buy citizens game on the phone who can't get there in person. So that's not a requirement. But as long as we have a Zoom-type portal where the link is posted publicly, as you did on the agenda, then there's no prohibition. And that was really all that I had to report on. There's the CARES Act too, which will change the age for required minimum distributions, is still pending in Congress. I'm not really expecting any action on it until after the midterm elections. So both houses have passed a version, but there are material differences between them. So we'll just keep an eye on that. But other than that, it's quiet out there, and that's a good thing. And I will see you all in person in September on the 21st, I believe.
That's correct.
Yep, I'm already booked. So it'll be nice to see everybody in person after 3 years.
You haven't changed a bit on television.
Who, me? I haven't changed a lot. When I was sleeping, somebody painted my hair gray. And I don't think I got any taller either. So,
We wouldn't know that
but I
either.
still remember where the building is.
He's probably wearing shorts.
Anybody have
Unless
anything
you have
else?
any other questions, I'm going to sign off and start pestering the division of retirement.
Nothing from me.
Thanks, Bob.
Thank you.
It's good to see and hear everyone. Look forward to seeing you next month. Bye-bye.
Bye.
Cole, do you want to step in and address the asset allocations at the end of the new language?
Yeah, sure thing. As Bob mentioned, there were a few really just kind of editorial, edits to the IPS in general. We hadn't reviewed it since, I believe, 2018 or 2019, so it was due for a broader review. And when it comes to the asset allocations here, attachment C, we just updated these into a different, format versus the table that we had below, as well as just corresponding these to the new strategy that we've had in place for a little while, which is 70% of the growth segment and 30% of the income segment. and then just the underlying kind of asset classes below those and the ranges in between. So really just kind of a housekeeping edit, just getting the policy in line with the current asset allocation strategy.
We'll add a column title to that range column there. We should have done that.
Oh, yeah, all right.
Yeah, I can definitely do that and send it back around.
Do we want to go ahead and address this issue on the discussion item? Is this something we're voting on today?
The board certainly can vote on it if you approve of it. Staff has looked at it and, we agree with all the changes that, we sort of worked together with Willis Towers Watson on that. And I think the language we put in concerning the investment manager attendance at the meetings, and the consultant's attendance at the meetings and whatnot, addresses all Bob's concerns. So, we're fine with it if the board wants to approve it.
I'll also move, I've read it, I think it's.
Second.
All right, we have a motion to
nice
approve in a
revisit that sort
second.
of thing.
Any discussion on the changes? Nope, all in favor of approving the new changes to the investment policy?
Aye.
Any opposed? All right, the motion passes to approve the changes. And we had moved on, that was the third.
I think we
Item on the
let
agenda.
Willis Towers Watson do a presentation.
Yeah, if Newman's not gonna be here until 10, we can go ahead. Well, if you wanna go ahead and do your presentation.
Okay, perfect. We'll start on slide 4, capital markets review. So we're looking at data here that's through June 2022. So we're really looking at kind of second quarter data, which matches the performance in the following slides. I'll speak to some updates as well. But the S&P 500, as you can see up in the top left, returned minus 16.1% from the second quarter, which brought the year-to-date return down to minus 20%. That's the worst first half of a year in 5 decades that we've seen. So certainly very volatile and negative performance in the equity markets, which I think everyone's probably pretty aware of. And you can see that that's across the board with U.S. small cap stocks as well as international stocks. Main reasons for negative performance, kind of 3 main things. Number 1 is inflation has been much higher than anticipated. In June, the CPI number hit 9.1%, which was its highest level in 40 years. You can see that down in the bottom left. Good news there is that in July, inflation was flat. So the annualized number actually came down from 9.1 to 8.5. So it's still very, very high, but at least we're seeing a bit of a reversal there. And that was driven largely by the decrease in some energy prices. Another factor causing volatility in the market would be the increased pace of interest rate hikes from the Federal Reserve. They've increased rates over 2% so far this year. They're meeting again in September. It's expected that they will raise probably 50 basis points there, and potentially even more later on into the year. So they've been a little bit behind the curve as far as kind of addressing inflation. So they're kind of making up for that and increasing rates at a level that we haven't really seen before. And one of the last main reasons for volatility in the market was just overall disruptions to energy markets and supply chains driven by COVID lockdowns in Asia, as well as geopolitical unrest in Ukraine had certainly flowed into supply chain issues, into a few different commodities, as well as just general kind of market volatility. For the fixed income markets, in the top right, you can see also negative performance there, down about 10% year to date. That is due to treasury rates increasing. You can see that in the bottom right, that dark purple bar. is the current Treasury rate yield curve, and the 2 bars below it is where that was at the beginning of the year. So you can see that short-term rates have really come up, and long-term rates have come up as well. So we're pretty flat across the curve now. That clearly has negative implications for the fixed income market. So pretty volatile markets. We have seen equity markets rebound somewhat significantly so far in the third quarter. So we're almost 2 months in to the third quarter, and the S&P 500 is down about 10% year to date. So that we've improved by about half so far in the third quarter. So certainly positive to see some improvement there. Still down year to date, but hoping that will continue. Last comment I'd make on capital markets in general is just calling out the GDP growth down there at the bottom left at minus 1.6% in the second quarter. That is 2 consecutive quarters of negative GDP growth, which historically has signaled a recession. Technically, we're not in a recession because a specific council has to deem that so. But we're getting kind of mixed economic data. While economic growth is receding, unemployment rate is the lowest it has ever been, and wage inflation is some of the highest it's ever been. So, from that perspective, the market's pretty healthy. Folks are employed and making increased wages. So, kind of a mixed bag of economic data. Any questions on capital markets in general? All right, moving on to slide 5. Look at plan performance here. We can see, looking at the 3-month column, this is also as of June 30th, the plan returned minus 11.8% for the quarter. It's down 16.6% for the year. That's right around its benchmark for the quarter and a little under the benchmark for the year. Driven somewhat by the growth segment as well as the real estate market in general. So kind of going down the line here, looking at LSB for the month, for the 3-month, minus 11%, but ahead of its benchmark of minus 12%. Keeping in mind this is the value component under equity manager. It's done a lot better than its growth counterpart. You can see Sustainable Growth Advisors down 20.4% for the 3 months. So much worse than the value component. Both are right in line with their benchmarks. It's just the broader market has experienced a pretty significant sell-off here. Pretty similar story in the small cap segment. Better relative performance. You can see at the total plan level minus 16% versus minus 17%. So adding a little bit of value, but still negative performance. LSD was down 12%, and Disciplined Growth Advisors were down 20.8%. Both ahead of their benchmarks, but still experiencing negative performance for the 3 months and year to date as well. Very similar story. The international equity segment, Mower there had a good month. They protected on the downside, but for the 3 months and for the year to date, still experiencing negative absolute and relative performance. So continuing to keep a close eye on them. So overall, the growth segment returned, minus 15.8% for the quarter. On the following slide, you see the income segment, and it was essentially flat for the quarter. So a little bit ahead of its benchmark of minus 1.2%, but just comparing the two, different pieces of the portfolio, obviously, in down markets, we would expect the growth segment to underperform the income segment, and that's what we've seen. The income segment, providing a flat return in a market that's down 20% is certainly beneficial to the portfolio. If the market is kind of going, gangbusters that we've seen, prior to this year, that would be reversed. But certainly kind of helping the portfolio a little bit. Right now, alternative credit performed pretty well across the board, minus 3.4% versus the benchmark of minus 4.6. So ahead of the benchmark, most managers you can see there beating their indices. Ares, while negative performance, still ahead of its benchmark. One Sharp continuing to earn its kind of 6 to 7% year to date, or each year, I should say. That's the largest piece of the alternative credit portfolio. Very stable returns there. We met with them a few months ago.
Cole, I have a question about them.
Yep.
I know we've had them 4 years, but the 3 years showing 5.8, and since inception showing 6.0. Did the first year have a banner year?
Yep, it's a good question. So the since inception number, since July of 2018, so almost, 4 years there. They do lag their returns by a quarter. So you can see that, like this past quarter, they earned, 1.2%. So that 1 year number or even a 3 year number, any of those annualized numbers, you can kind of think to add, 1.2% to that. They haven't, reflected that in because they lag their returns a little bit. So you can kind of think that they'll add, they strive to return 6 to 7% per year. So that's why that inception number is just a little bit higher. But overall, they're going to be right around 6 to 7%.
Okay, that's why, because if you look at the surface, it doesn't compute.
Yeah, I mean, it's, like I said, they lag their returns, so it's you kind of have to just add in what that last quarter's return would be. And it's going to, each year is going to be a little bit different, but they're targeting 6 to 7%, and so you can see, since inception, they're right at that mark.
Yeah, Cole, one other thing I'd point out too with the One Sharp historical numbers is that when we funded this strategy back in July of 2018, there were a lot less players in the space. So the loans that One Sharp was able to make were at a kind of higher interest rate, if you will, than the loans they were able to make over kind of more recent time periods. So what we started to see is kind of more and more investment managers find out about the space, got more attractive, more capital flowed in, that started to drive down yields a little bit. So you started to see kind of the returns come in from 6 to these kind of 5.8, 5.7 type numbers. What we've now seen actually year to date is that swing back into reverse as kind of pressures in the housing market have forced out a lot of these, what kind of One Sharp are referred to as tourists. So kind of investment managers where residential bridge loans are not a core opportunity set for them, but just something that they've kind of found out about, started to do a little bit on the side, and now that it's gotten a little bit or required a bit more kind of thoughtful approach, they've started to pull back, and so yields have come back up. But to Cole's point, we would expect this strategy to return in that kind of 6 to 7% per annum across most periods.
Thanks, Zach. This is William. I need to let the board know that we're having an issue with Zoom, and it looks like it's about to end our meeting in 2 minutes. I'm not sure why that is. We have Zoom Pro. We're supposed to have meetings that last as long as we want, but it looks like Zoom is going to shut this meeting down in 2 minutes. And I know that Nuveen wasn't even going to join us until 10. I think when we originally scheduled them for that time frame, we thought that we were going to have a couple of issues to discuss that would carry us to 10 o'clock. including a disability review, and then a discussion of vested terminated benefits. Since those items have been shifted into September's meeting, you know, I don't think we need to wait for Nuveen. I don't think we can reschedule Nuveen, I think. Would that be okay with the board?
Sure.
And with Willis Towers Watson?
That's fine with us. I can let them know.
Okay. And not to take over, but I know that, Cole, you guys had wanted to discuss a fee increase. I know that the chairman, board chairman Eugene Dugan, had contacted me, and he wanted to be involved in that discussion. So I think the board would consider postponing that discussion until September as well.
Be a busy day, but yes.
Yeah, be a long meeting in September. I'm
I'll
fine.
bring lunch.
Order pizza.
So after having said all that, Cole, I'll turn it back over to you guys and maybe have you wrap it up in about 45 seconds if you could.
Yeah, no problem. We'll table those discussions to September. Just wrapping up real quick. I mean, real estate performance was the only positive performing sector there. And so, you know, overall, the performance is in line with expectations from our side. So no issues, no action items. IPS was approved. So we'll review the fees and have Nuveen present in September.
Thank you.
Thanks, Cole.
Thank you all.
Goodbye, thank you. Oh, yes, we'll save our Nuveen.
To postpone Nuveen, or?
I think we're
deny
good.
it?
Yeah, it's not a big deal.
You just crashed it.
Okay, there it goes.
Oh, it was right on time, at least.
So we're done.
Free Zoom, the free Zoom meeting.
Yeah.
So it must be the public, maybe it's the public access side.
No,
We
should
have a paid account with Zoom, so that shouldn't happen, but we'll sort it out with Becky. Well, that's the other issue.
The other day, there was an upgrade.
We have to
or some
move to
sort of
adjourn, so you guys
system.
can close the minute that we adjourned at 9:30.
Yeah, okay, yeah.
I move to adjourn
No,
the meeting.
I'll second
All
it.
right, motion and second, all in favor?
Sorry about that, guys.